Okay, thanks very much, Morgan. I always like talking at the trading pub because it's such a relaxed atmosphere. It's great fun being here, and thank you everybody for taking your time to join me this afternoon. As Morgan mentioned, I'm going to be talking about support and resistance trading, and it's a concept that a lot of people think they understand, but a lot of people really don't understand. So hopefully I'll be able to shed some light on some things, maybe um, open you up to some new concepts that you hadn't considered before. Um, my wingman, Adam, isn't here yet. Hopefully he'll be showing up shortly. He'll give you all the particulars about the contest. We're actually giving away the Ultimate Support and Resistance Suite, which you'll be seeing a little bit later in the presentation. Incredible value. So if you have an opportunity or you're inclined, you might want to sign up for that raffle that we're going to be having. All right, so let me just make sure that the slideshow is working, and you guys can let me know whether or not the screen is advancing or not. This is the headshot, my own and Adam's. Adam is actually the originator of Indicator Warehouse, and it's uh, a business that's devoted to finding and developing the best indicators for traders. And there's actually some very unique software available there. I'll let Adam tell you more about that when he arrives, but in the meantime, I'll tell you a little bit about what we're going to be talking about today. We're going to be talking about what support and resistance is. I'm going to address what it is and what it isn't. I'll show you the basics of trading with support and resistance. And I'm also going to show you a tool that I had a hand in developing, which is useful in trading to identify potential support and resistance areas as they develop. Now, I know I've got about an hour's time slot, but you're going to see this is actually a very simple procedure to trading support and resistance. So I do welcome your questions, and we'll deal with a Q&A maybe toward the end of the presentation. All right, a little bit about myself. I've been involved in the trading arena for almost 20 years now. I started getting involved in trading back in 1995 uh, as an active trader, and I made a whole lot of mistakes. Um, my trading training, a lot of it came through the School of Hard Knocks, um, but I've also written a couple trading manuals. Um, one of my manuals is The Truth About Trading Support and Resistance. And a lot of people recognize me as a support and resistance trading expert. Support and resistance has always been my methodology of choice. And I hope that, maybe, like I said, I'll be able to shed some light on some things for you as we go on. So what is support and resistance really? Simply put, support and resistance is a graphical display of supply and demand. So for those of us who are chart traders, we like to reference our charts for clues about what the market is doing next. And support and resistance is perfect in this respect because it shows us the limits of the buyers and the sellers. So why is support and resistance important? Well, quite frankly, support and resistance is important because it can boost the performance of any trading system. Because support and resistance shows us the limits where the buyers and sellers are prepared to go, it can actually give us a line in the sand to trade off of. Once we know where the buyers and the sellers are, we can actually structure a trade to take advantage of the buyers or the sellers. Every chart pattern is essentially based on support and resistance trading. A lot of people think of support and resistance as being something foreign or removed from chart styles, but really it's not. Support and resistance is prevalent in the market in all respects. And the easiest way to see it for most people is in a typical chart pattern. Nice thing about support and resistance is that, unlike other indicators, it's actually a leading indicator. And that's because support and resistance is based on price. So there's nothing that is more accurate or fluid than current price action. And once you know where the support and resistance levels are, well, then you're going to be able to plan your trades accordingly instead of waiting for, stochastics to become overbought or RSI to do something or your Bollinger Bands to do something. So support and resistance is very helpful in that respect because it is a leading indicator. And honestly, once you learn how to identify support and resistance areas, you'll be able to read a chart like a book. You'll be able to, like I say, see where the buyers and sellers are, see who is controlling the market, and take advantage of them. You'll be able to structure your trades to take advantage of their strengths as well as their weaknesses. You'll be able to do one of my favorite trades, which is to trap traders. And I'll show you how to do that before the end of the presentation. So you generate high probability signals. You can play off of the market strengths, play off the market weaknesses, and hopefully become a more effective trader as a result. I apologize if I cut out for a little bit. It's because I'm fighting this cold. I just picked it up today, just in time for the presentation. Why does support and resistance work? Well, as I already mentioned, it works because it's based on real life. It's based on price action. Support and resistance works because you have real people taking their real hard-earned money and buying or selling the market in anticipation of the market going higher or lower. So real people making real money decisions. That shows you where support and resistance truly is compared to other tools that people use when they're trading, indicators of different sorts and so on, which actually aren't there. When you think about it, we throw all this stuff on our charts in an attempt to generate a more accurate signal, but in actual fact, none of those things are really there, right? The moving average lines aren't really there. The fib levels aren't really there. Stochastics aren't really there. The only thing that is truly real on your chart is the price. So I believe as a trader, it's important that you understand price. It's important that you understand how support and resistance actually works. And best of all, it's very simple to trade. Very simple to trade. All right, so there's two types of support and resistance. So when we're looking to find support and resistance areas, there's the historic support and resistance, and that's really based on past price action. This is the traditional type of support and resistance. This is what most people think of when they think of support and resistance. They look back in their charts and they try to determine certain price levels where the market has exhibited some sort of sensitivity, and they'll forecast that into the future. They'll say, well, if the market was sensitive to price at this time, well, then it's probably going to do so again in the future. And there's some truth to that. The other type of support and resistance is the predictive support and resistance. This is where we actually try to forecast where support and resistance will occur in the future. And why is that a big deal? Well, hey, if you know that, say, crude oil is going to go to 105.50, well, you can use that information as a profit objective, or, if you're trading at 105.40, you might think about getting your stop in tighter, or if the market breaks 105.50, then you might consider the next forecast level as a possible profit target. So there's a lot of ways that you can use support and resistance area, but of course the key is to accurately forecast them. All right, let's take a look at what a lot of people think support and resistance is. When most people think of support and resistance, they're probably going to consider some of these types of factors. A very common support and resistance is common numbers. Common numbers are really nothing more than numbers that the market seems to exhibit a sensitivity to, where the market repeats, hitting a high at this number for a repeated period of time, or it is opened at this particular price or closed at this particular price. It's just a number that tends to be common. A lot of markets do exhibit sensitivity to common numbers. If any of you have ever traded the 30-year bond, that's a market that is especially sensitive to certain price levels. Bond traders live their lives by a quarter point. So that means that the bonds are going to be particularly sensitive at the 00 and the 16, which is the halfway point. But they're also going to be sensitive to the quarter points, 08, 24, and then of course the whole number again. Bonds, of course, trade in a 16th, or pardon me, a 32nd of a tick. So if you're not familiar with bonds, it's going to sound a little bit odd, but the whole number in bonds always ends in 00, and the halfway point between points in bonds ends in a 16. And the market will react to that. Currencies, very similar. Currencies have a tendency to be particularly sensitive around the whole number and the halves. So if you're trading a currency, very often you'll see the market exhibit some sort of support or resistance around the whole number. So when it trades, 00, or if it trades at the 50-cent mark, you're going to see some sort of sensitivity occur there. Other markets that don't trade into decimal points, like cocoa, for instance, it too will tend to exhibit particular sensitivity at the whole numbers. The Dow, for instance, likes to exhibit sensitivity at the whole numbers and at the 500s. So if you're a Dow trader, pay attention when the market gets to the 00, or I guess the 000 and the 500s. It's going to be very sensitive around there. The Bill just posted a comment here as well. He says the 60 big time likes to find support and resistance around the 00s and the 50s. And that's true actually for a lot of the currencies. Another common way of finding support and resistance areas is on the swing points. And there's some validity to this as well. I am a fan of swing points, which you'll see in a moment here, because swing points will tell you who is in control of the market. Is the market making higher swings, or is it making lower swings? Is it balanced? Is it going one higher, one lower? Is it not having any follow through? That kind of thing will tell you a lot about who is in control of the market. Nice thing about swing points is they're relatively easy to identify. Unlike the common numbers, which can be a little bit more difficult to identify, swing points are very easy. Common numbers, a problem with the common numbers is that you can tend to get too many on your chart as well. People get really caught up trying to be too precise. Same thing with swing points. People will try to be too precise in identifying a market swing point. But trading is not that precise. The problem with swing points is a lot of people don't know how to identify them until it's already too late. Oops. Then there's also things like pivot points, commonly known as floor pivots. Pivot points, I'm going to address these a little bit more later because pivot points are a predictive way of forecasting where support and resistance is likely to occur. A lot of traders use floor pivots, so they are predictive in nature and they do have some influence, but it always raises the question, are they influential because everybody is using them? Or are they influential because there's really support and resistance happening at these levels? We'll talk about that more in a minute. The big problem with pivot points is a lot of people don't know how to trade them. So, and we'll address that also. I'll show you some different methods that you can use to trade support and resistance. There's also other things like Gann lines. The Gann fan was developed primarily to measure the strength of the trend, but it's also a support and resistance tool in that it tries to forecast where the market is going to find support and resistance. Same thing for traditional trend lines or tools of that nature, where a lot of traders will be watching particular levels as the market tends to get closer to, a higher Gann line or a lower Gann line. They will anticipate buying and selling to develop off of there. And there's also the good old moving averages. They're also predictive. They try to forecast where the market is going to find support and resistance. And with moving averages, as with most tools that you put on your charts, sometimes they work, sometimes they don't. Sometimes the market will be very respectful of moving averages, bouncing off of them, allowing the market or allowing the moving average to cradle the price, making it very simple when to buy and sell. But as with a lot of the tools, people get confused about the best ways to use them. And moving averages are, again, one of those things that aren't truly on your chart, right? They're not really there. So sometimes the market will respect them, and other times it will move right through them, almost like they're not even there. The problem that most people encounter is that they put far too much stuff onto their charts, and their charts end up looking like this. Right? So their charts are cluttered. You can't make a decision with a chart like this. People become consumed with the process right there. That's all they focus on is, how can I make my entry signal better? How can I do this? How can I do that? They get caught up with the numbers and they forget what support and resistance actually shows. And what support and resistance is showing you, of course, is that who is controlling the market. When you're looking at a chart like this, it's virtually impossible to make a trading decision. And trading, believe it or not, is all about decision making. In fact, your ability to make a decision is probably paramount to your trading success. Decision making and money management are two of the pillars of trading success. In this session, we're going to be talking mostly about the decision-making aspect, but money management, ultra important to how you trade. So what is support and resistance? Well, believe it or not, support and resistance can be narrowed down to just 2 bars. See, I told you it was simple. um, the support and resistance is showing us the limits of the buyers and the sellers. So I have a, a 2-bar combination here, combination A and combination B. Which one is resistance and which one is support? I'll let you think about that for just a few seconds, but I think if you think about it for just a moment, you'll realize that A is showing us support and B is showing us resistance. So simply put, support and resistance is when price changes direction, when the buyers or the sellers take control of the market. Everything else in between is just noise. So how do you trade support and resistance? Well, support and resistance is more about being reactive than being predictive. I think that's very important. Support and resistance shows you who owns the market. If the market is in an uptrend and we're getting support, namely the red-green bar combination, well, then we know the buyers own the market. If the market is in a downtrend and we get resistance or the green-red bar combination, we know the sellers control the market, and so we'll look to sell. It's much easier trading this way when you stay with whoever controls the market. Makes sense, right? And yet a lot of people will try to go contrary to who is controlling the market. So support and resistance traders, you're going to be a lot more reactive. You're going to wait to see what happens when price encounters a support or resistance region. And then you're going to react based on what the market is doing when it hits that level. Your 2 primary ways of trading support and resistance are either to look for a reversal or to look for a breakout. So a breakout, simply put, looks like this. It's very straightforward, and yet it's a forest, you can't see the forest for the trees kind of scenario. People will see the market do this all the time and yet fail to take advantage of it. So when a market breaks a resistance area, it will have a tendency to come back and retest that level. Why is it doing that? Well, when it breaks the resistance area, the buyers have overwhelmed the sellers. It doesn't take too long for the sellers to try to take the market back. When that happens, the market's going to come down, and now the buyers, it's looking for fresh buyers, right? It's going to be looking for buyers at or very close to the level where it overwhelmed the sellers at. That's the formation you have at the top. Formation at the bottom is the exact opposite. Sellers have broken through buying support, and now the buyers try to rally the market back up, only to have the sellers squash their efforts and send the market lower. So when you see these things happening, you're able to buy and sell accordingly. If you see the market break out through a resistance area and then come down and show you support, and what is support again? It's that red-green bar combination. You know you can buy because that is showing you support. If the market breaks the low and then rallies back up and gives you resistance, namely the red-green bar combination, you can sell because you know the sellers are coming back into the market. Let's take a look at what a reversal looks like. A reversal is essentially the same thing, except on the retest, the market comes up short. So the market comes down, makes a level of support, bounces higher, tries to recapture the downtrend, but in the case of the example at the top there, the buyers have overwhelmed the sellers and the market rallies higher. The opposite happens, of course, in an advancing market. When it tops out, the market heads higher, comes down, tries to continue the trend, but then the sellers overwhelm the buyers, or the buying simply dries up. So it's a very common pattern, something that people see time and again, and yet it's something that so few traders take advantage of. But it is so simple, it is so effective, that really you'd be silly not to trade without it. Let me show you a couple of examples of very common price patterns that demonstrate support and resistance. Here is a cup and handle style formation. And let's see exactly what's happening here. The market has come down, come back, it's testing the limits, comes back down off of the resistance, and all of a sudden the buyers become more active and they overwhelm the sellers. And the market continues higher. In fact, if I had extended that neckline, you can see that we actually have a reactive signal after the breakout. So you had several opportunities to get into this trade. Right? We could buy it higher on the breakout, or we can buy it higher on the retest. Either way, it's a very simple way of getting involved in the market. Very simple, very strong formation. Head and shoulders, tops and bottoms. These are the reversal patterns that we were just looking at. Some people refer to these as M and W patterns. The concept is the same, where the market makes a high, tries to recover the trend, but it fails. It comes up short, and all of a sudden prices start heading lower. The reverse, of course, when the market is bottoming out. Prices head lower, they make an extreme point, then they head higher, try to recover the downtrend, but the market is overwhelmed by the buyers and price continues higher. For those of you who have been in the free futures trading room with me, very often you will hear me refer to the test of the extreme. That's exactly what this is, where we're looking for the market to test the extreme price, and then if it fails, well, we know which way the market's going to go. 1, 2, 3 tops and bottoms. Very similar formation. It's kind of a half of a head and shoulders style formation, but you see it's the same thing. The market either testing and retesting previous support and resistance areas, or failing to recover a trend and head higher or lower. So it's, again, very simple way of trading. So those are kind of some of the reactive styles of trading. There's also the predictive support and resistance. And two of the most common predictive support and resistance methods are pivot points and Fibonacci retracements. Pivot points, I touched on briefly. Pivot points, also known as floor pivots, are calculated by a lot of floor traders, and they're based on the previous day's high, low, and close. A very simple formula. They're standard on NinjaTrader. There's variations of these. The idea is that you're going to try to predict where the market is going to find resistance if it advances, where it's going to find support if it heads lower. So floor pivots, the problem I have with them is that they tend to be self-fulfilling. They work until they don't, right? A lot of people will look at them and say, oh, look how well, S1 held, or S2, or how the market is reacting to R1 and R2. Well, for every time you see the market reacting, I can probably show you a time that the market blew through S1 and S2 and didn't even hesitate. So like a lot of things that you can put on your charts, pivot points aren't really there, right? They're manufactured. They're loosely based on price. That's the upside. Fibonacci retracements Another very popular method of forecasting where the market is likely to find support and resistance areas. Also easy to use, standard with Ninja and just about every charting platform available. The problem I have with Fibonacci retracements is that they too seem to be self-fulfilling. And as they began to fail, we got more and more levels. When I started trading, you were mostly interested in the 50% retracement. That was the big thing behind Dow theory, 50% retracement, big thing behind waves theory. 50% retracement was the level you were always looking for. Dow theory also had the 33 and 66% retracement levels, which were, usually effective. But even as those levels began to fail, all of a sudden Fib traders started introducing 25% levels and 75% levels. And now some even fractured those levels. So, what use is it having that many levels on your chart if all it does is clutter your decision making? The other problem with Fib retracements is that unless you have a well-defined trend, as we do here in this chart, sometimes it's pretty difficult to decide where to draw your Fib level. I could have easily drawn 3 other Fib levels on this particular chart. So the bigger question then becomes, well, which Fib level do you use? And if you've ever played with Fibonacci retracements, I'm sure you know exactly what I'm talking about. Which brings me now to the ultimate support and resistance suite. This is actually how I trade support and resistance levels. The ultimate support and resistance suite is not based on Fib levels. It's not based on pivot points. It's actually a very elaborate algorithm that forecasts where future price is likely to find support and resistance based on what has happened in the past. So I'm going to try to disable the slideshow here in a moment and do a desktop sharing. So let me see if I can get this to work properly. And hopefully I will be able to get the right monitor displayed. Oh, hold on here. Okay. All right, let's see if we can't get this going now. Bear with me.
Eric, can you hear me?
Yes, I can.
Hello there.
Hi.
Hey folks, it's Adam Halpern from Indicator Warehouse. Eric, get a glass of water, you poor guy. You sound like you're losing your voice.
Oh, I just picked up a cold just in time for the presentation.
Well, that's what you get for living in the North.
Thanks for your sympathy.
Folks, I'm sorry I'm late to the show, but I'm definitely here and I'll be around for questions afterwards, especially since we want to be sympathetic to Eric and let him rest his voice when he's done showing you the stuff.
Okay, so is my screen sharing not working? Can you guys see my charts? No. All right, let me try this again. Good old Internet Explorer. All right, what I'll do is we'll try looking at different applications then. Hopefully this will work. Okay. Hopefully you have one of my charts. Yes, okay. Hooray. Okay, I'm going to enlarge this. This is actually a 15-minute gold chart. And what I like to do in these presentations is I don't like to cherry pick a chart, right? I like to go to a chart and say, this is what happened today. This is how the tool worked. Because it's easy for anybody to cherry pick a chart. I'm going to show you a few different charts here. This particular one is 15-minute gold. These lines that you see on here, this is the ultimate support and resistance suite. And what it does is it actually forecasts 21 support and resistance levels. So you can see it's quite broad. I've never seen the market encounter all 21 lines or all 10 lines. I guess we have 10 to the top, 10 to the bottom. I have seen the market get halfway there. But no matter how active the market may be, you're still covered. The way it works is quite simple. Like I said, it is based on previous price action. So these lines that it's forecasting here, it's actually basing its forecasting on price activity that has happened in the past. The center gold line is your reference point. And it's also the median. It's right in the middle, so you know you have 10 lines above, 10 lines below. This first blue line that we encounter, that is primary resistance, and below that we have primary support. These tend to normally be the two biggest obstacles to the market advancing. A lot of times what I'll do is I'll take a look at how the market opens relative to the median line. Opens above, I have a pretty good idea the market's going to be bullish on the day. If it opens below, I have a pretty good idea the market's going to be bearish. As the market advances, it encounters secondary support and resistance areas. And the resistance or the bullish ones are green lines, the bearish ones are the reddish lines. Pretty simple. So let's take a look at what we learned and how you can incorporate this into your trading. Well, a very simple way of trading support and resistance lines is just to trade the reaction. So remember, support is a red-green bar combination. Well, look at this. Here we have gold hitting the line on the number, and what does it do? It gives us a red-green bar combination. That is an obvious buy signal. And I can tell you that when the market bounces off of primary support or primary resistance, it will have a tendency to move at least two zones. So here it's moved one zone, two zone, hits the second zone, and begins reversing. So you can use this both to initiate your trades and as a way of forecasting a profit objective. Now we're on the bullish side of the median line, so naturally I'm going to be a little bit more bullish than I am bearish, but I do know a lot of traders like to take the action both ways. A very simple way of trading a support or resistance area is to trade it if it closes above or below a particular zone. So here, this particular bar closed just below the zone. You could have shorted the next bar and again traded it back to the median, where we once again got our red-green bar combination, initiating another buy signal. So you can go through this chart time and again, and you can find all kinds of red-green bar combinations. Here, where we're trading currently, this is real time, that the market is reacting to this resistance area. We tapped it, and look, we have our green-red bar combination suggesting there's resistance. So I'm not going to be interested in buying here right now because it looks like the market will probably head back down here somewhere around this support area where it might generate another signal. So that's how you could use it, say, on this 15-minute chart. Let's take a look at another chart. Oh, hold on. Let's see if I get the right one up here. Okay, this one that we're looking at, this is the gold on the diversified trading system. For those of you unfamiliar with diversified trading system, it is a method or a system that was developed at Indicator Warehouse. Essentially what we're doing is we're looking at the market from different time frames. Well, I shouldn't say time frames, different environments, because we're not looking at different time frames. So we're looking at the market from a short-term environment. That's our Hawk tool. This is the Falcon tool. It's looking at the market from more of a mid-range type of environment. And then we also have the Eagle, which looks at the market from a longer-term perspective, or looking more for a trending environment. Now, when you have a system that actually generates signals for you, you can use these support and resistance lines to help you confirm a signal. So for instance, here we are on the Falcon, and we're generating a buy signal. Oh, and look, it just happens to be bouncing off of a support area. Very easy signal to take. Here is a sell signal. This is real time. We're looking at this right now. We just bounced off of the resistance area, and we're generating a sell signal.
Eric?
Where do I think it's going to go? Well, I think it's going to go right down here to the support line.
Eric?
Omar, who is the Forex trader. Oh, the chart's not coming
Eric,
through.
can you hear me?
1 second, please. Yes.
Can you reload your chart? Hit like F5?
I will. Sure. Let me see if I can do that. Oh, hooray.
What are we seeing?
Well, I'm seeing your chart.
And is it?
The eagle on the NASDAQ.
Yes.
Okay. So
Maybe that will help.
essentially, again, you can use the support and resistance areas to help with your decision making. I'm a big proponent that whatever tool you put onto your chart should help you make a decision. Omar, who does the Forex trading, really likes the support and resistance lines because it enables him to easily pick profit targets, easily decide where he wants to place his stops, and so on. And you know, it's very effective that way. So here we are on today's NASDAQ, and you can see where about halfway through the chart the system was generating some buy signals, and those were coming off of a support line. So it made it a little easier to perhaps buy into that market. Again, it's all about decision making. And when the market encounters a resistance area, you can use it as a profit target and manage your trade accordingly. So you can either bring it in, bring your stops in, or exit on target. Very often you will see the market give us some sort of significant reaction to these support and resistance areas. Okay, I'm tempted to try to share another chart here.
If you want, I can bring up another chart for you.
All right, well, why don't you bring up today's gold? I was looking at gold earlier.
No, I never trade gold. What's the instrument?
Tool you use. Maybe I haven't shown anyone the Hawk yet, if you have the Hawk open.
I can. You know, before we go there, let me just, thank you. I'll bring it up in a second. Let me tell you all a little bit what's behind this indicator, because, you know, Eric was absolutely instrumental in doing this, and it was really on it was on my request. So one of the wonderful things about working at Indicator Warehouse is I have programmers coming to me all the time asking if we'll add their products to our inventory, and so I get to see all kinds of interesting things. And so when we were designing this, I mean, it's Eric's algorithm that goes into powering these lines, but just purely from an indicator perspective, one of the things I noticed from other support and resistance providers in the market was you had people that had zones, you had people that had lines, right? You didn't have both, right? And so that's one of the things that we made sure we did is if you look closely here, you can, if you want, you can just have lines. If you want, you can just have zones. You can make them as large or small as you want. It was funny when we were QAing this, one of the people that works for me was like, well, I'm not sure these are accurate because, it went close to the line, but it didn't actually touch it. And I had to explain to her that, if you go down to the exchange, there are no imaginary lines floating in the air that everybody's looking at, right? These are inflection points in the market based on, mathematical algorithms. But they're uncanny. I mean, Eric's obviously been doing this, I don't know, how long you been doing this, Eric? 15, 20 years?
Yeah,
Long enough
almost
that he
20
was
years.
lucky enough to get the URL supportandresistance.com. That probably tells you right there, right? And so just from an indicator perspective, there's some interesting features and functionality that we made sure was built into these, including alarms and alerts, to give you the flexibility you want from a trading tool. So let me see if, is it
Well,
F2,
the nice
folks, in
thing as
NinjaTrader that
well
allows
is
you just to bring up? No. Can't remember how to change an instrument on the fly.
that's all right. You know what, Adam? We'll just go with what we have here because there's really just a
Sure.
few more points I want to make, and unfortunately, I apologize that the desktop sharing isn't working quite as well as I hoped it would, but such is technology, screen sharing software, very sophisticated stuff. But the nice thing about uh, something like the support and resistance suite is that it's universal, right? So if you happen to be trading stochastics, for instance, you just love stochastics, can't trade without them. Well, this is a very good confirmation tool, right? So if you get a stochastics coming out of the oversold region, becoming more bullish, and you happen to be getting support bounce off of support and resistance line, it makes it that much easier to buy it with confidence. Whereas if you're coming out of the oversold region and you're right headlong into a resistance area, well, maybe you'll choose to postpone your entry until you get on the other side of the resistance area. And hopefully, that will prevent you from getting into a bad move. And it works across the market spectrum. I see people here asking, can you show Apple? Can you show the E-mini? It works on all of it. If you can plot it on NinjaTrader, it will work. So it's because it looks into the history of the chart and pulls price data from what has happened in the past and projects that data into the future, where the more likely support and resistance areas are actually going to occur. It really doesn't matter what market you're looking at because as I started out with the presentation, support and resistance is universal, right? It is all about showing you supply and demand, where the buyers are, where the sellers are, and how you can take advantage of the buyers and the sellers. So we still have a few minutes left here, so we have some time for Q&A. Bruce is asking, are the support and resistance lines equidistant? No, they're not. If Adam, if you shrink up your chart, you'll see that they actually vary in span. Now, very often, support and resistance will vary around the median an equal distance. But no, they will expand and contract as the indicator reads them. I am Sam says, it sounds like the Ichimoku cloud charts. Well, it might sound like it, but they're not. These are based, believe me, it took me a very long time to develop the math behind this, and they're not like anything that is currently used to forecast support and resistance. Interesting question here from Don. Don asks, the markets and indices are highly correlated. Do the lines in the NQ, ES, YM, and TF all align so that you get the same signal at the same time? You know what, Don? That's something I've never tried. But it is, I can tell you from the NQ and the YM, the mini Dow, that very often you will get corresponding signals. But of course, like you said, the markets are correlated anyhow, so it's not at all unusual to see the NASDAQ and the YM, or the E-mini or Russell for that matter, begin to rally from the same point. Rob is asking, do I know of voodoo lines? No, sorry, I don't. I'm not familiar with those. I'm just, there's a lot of different methods of forecasting support and resistance. But honestly, I think if you investigate these, you'll be fairly impressed with how well they work.
Yeah, don't
Adam,
folks
why
see
don't
this?
you,
Okay, I'm going to show you. It's hard to see this right now, and this would be a different presentation anyways, but the diversified trading system in which we incorporate Eric's lines works with three distinct trading systems all running at the same time. Just because there's a band here, it has nothing to do with Ichimoku clouds. We get asked that all the time. This is basically a long-range chart. This is a mid-range chart. This is a short-term chart. And the lines all run on these charts. They're all looking at the same instrument, if you wish, from different dimensions, from different perspectives. Again, different discussion. If you want to learn about DTS, more than happy to discuss it. I'll put my contact information in here. But the point was just to show that we had to have some kind of backdrop for the lines.
a couple
I'll
more
close that out.
questions. Doyle is asking, these S&R lines could have been S&R in the past. What about new highs? How does it forecast? Well, it forecasts where support and resistance is likely to occur. And essentially what it does is it gives you the opportunity to make decisions about how you're going to trade. So as I mentioned, if like right now I'm watching gold, it's coming down to that resistance area that we were looking at. Once it gets down there, I'll be looking for support to come in and possibly something that will generate a buy signal. So how we, I showed you those reactive patterns and those breakout patterns. That's really the heart of support and resistance trading. So when you learn to identify those, and we could have taken advantage of the failure in gold and currently be in a fairly profitable position. And it's more of a confirmation tool. Felipe is asking, do you need any other indicators? No, not necessarily. You can trade it just purely off the price. I tend to do that, but it's universal. You can couple it with whatever indicator you like. I use it with the diversified trading system platform to generate signals, to confirm signals, to help me make decisions about my profit objectives. You can use it, say you love Bollinger Bands. You can use it along with Bollinger Bands or RSI or stochastics or really anything else that you're currently using. It's a way to refine the decision-making process. Remember, trading is all about reacting. It's not so much predicting where you think the market is going to go. And I see people do it all the time. And honestly, folks, it's what you want to do is you want to get used to reacting to what the market is going to do. If the market is making a breakout and then it reacts to the breakout, well, get ready to trade in the direction of the breakout. Don't try to go against it, go with it. If the market is testing the highs and the lows and it's coming up short, don't second guess what the market is doing. It is telling you what it wants to do. That's why I said it's almost like reading a book when you get used to looking at the market this way. So Adam, I'll turn it back to you. I believe there's a couple of slides left in the slideshow.
I love these predictions about what the market's going to do tomorrow. No offense, nobody knows what the market's going to do tomorrow until it happens. So that's the beauty of the market, right? Anyways, that's probably a discussion we can have over coffee. So let's see what time it is. Yeah, I'm here as long as you want. I'm happy to answer any questions you have. As we promised in the promotion, in the invitation, we are going to do, what do you call it? A draw, right? Sorry, I'm getting tired here. And so someone's going to get the Ultimate Support and Resistance Suite for free. All you have to do is go to that link right there. I think Yana put it into the announcements section earlier. Still there? Yeah, there we go. So go to that link there, sign up, and then what I'll do is we'll send out an announcement about who won. Obviously, the person that wins will get to hear first. And, there's part of what you get with Indicator Warehouse is we have free trading rooms, so you can see this in action if you want. We have training on our training site, and there's plenty of support. It's one of the things that we're known for in the industry is we don't hide behind a web form or an email address. You're more than welcome to call us and talk to us about anything about trading, about DTS, about the Ultimate Support and Resistance Suite. It's the #1 add-on that we have for the DTS system. I use it every day. All of the other trade moderators that we have one for equities, we have one for Forex. Eric does futures. They all use it. So yes, the announcement will be emailed. Here, let me get that link for you. I apologize. If I put it here, see if that works. Does that work? Chat box. If you can't see the chat box, I'm adam@indicatorwarehouse.com. I'm happy to send you the link. Any questions for Eric, poor guy who I thank dearly for putting his voice at risk for coming on today? Yes, only Ninja. We have found that NinjaTrader is the only platform that's sophisticated enough for the add-ons that we've designed. And so, unfortunately, I'm sorry all you meta folks out there, but it just can't handle what DTS is all about. DTS isn't just the support and resistance lines. We also have a very sophisticated trade management tool that comes with it, which includes position sizing and automated trade management. You just can't do that on the other platforms. We also have custom price action bars. They're special Renko bars that were designed for the system. Again, just can't do it on any other platform. So someone's asking about a special price for the DTS system. Sure, absolutely. Email me and I'm happy to talk to you about that. Yeah, I'm sure Sierra's nice on the CPU, but is it about making money or is it about having a fast CPU? I recommend, Jeff, you speed up your machine. Sorry, Tom, we looked into TradeStation. Easy language can't handle it. All right, anything else for Eric? So folks, when I say NinjaTrader only, I really mean it. Anything about support and resistance, when I tell you that Eric is the grandfather of support and resistance trading, I'm not kidding. It's how I met him. And he was one of my original mentors, and he was so awesome, I convinced him to come on board and join the company. He's been instrumental in the design of DTS and absolutely instrumental in this Ultimate Support Resistance Suite. It really is the algorithmic expression of all of his experience. So I wouldn't take it lightly.
Ooh, I like the way you said that.
Yeah,
Algorithm
so
and
did I actually. I'm
expression.
going to save that one
It has a ring
for some email that goes out.
to it.
All right. Any other comments besides NinjaTrader bashing? How much does the trading room cost? It's expensive, and by that I mean it's absolutely free. So we have 4 trading rooms. 3 of them are running in the morning at the open, 1 for the equities. I'm sorry, 1 for futures, 1 for equities. Our Forex room runs during the London session when you really should be trading Forex. And then once those shut down, we have something called DTS TV, and that's where our buddy Reality Ray comes on, and he has DTS running all day long. It's all free, so you're welcome to come in anytime you want. If you go to indicatorwarehouse.com, you'll see a link for the trading rooms. Here, I will even, that should work. Yeah, we're very transparent. You'll see. We've been around, I guess, almost 5 years now. So one of the leading NinjaTrader partners that are out there. We've been there since they planted the trees. Eric, what time do you start the futures room?
I started at 7 Pacific, 10 Eastern.
Okay. And I love Omnovia. We used to use it all the time, but we switched to a different platform. I can tell you it goes a lot smoother on the other platform, so don't worry about technical difficulties.
What do I trade in
Eric,
the trading room?
What are you trading in the,
Yes, it's the
GTS room?
DTS trading room, and I focus really on anything you want to see. My markets of choice are the NASDAQ, the mini Dow, the 30-year bond, and crude oil. But I'm more than happy to bring up any chart you'd like to see. We get people asking about the 6E. Sometimes we'll look at gold. Last couple of days we've been looking at soybeans. So yeah, anything you're interested in.
In the equities room, it's exactly what you'd think. Michael Filigera, he's been trading, I don't know how many years, used to be a pit trader. And, you know, he's looking at whatever's moving. Right now, I think one of his favorites is Bank of America. And then Omar is an interesting fellow. He used to be an EA tester, so he actually came over from the Metaphor world over to NinjaTrader. And I mean, quite frankly, the main reason was our Renko bars. You just can't get the quality of Renko bars that we have over on MetaTrader. I wish you could, but you can't. So, but he's trading the London session. So for those of you like me that have to wake up at 2 in the morning, if you want to trade the London session, just putting that out there up front. Lee, we use different Renko bar sizes. Remember, we're running 3 systems simultaneously. That's what makes the diversified, the D and the DTS. It's what makes us unique. I don't know of any other discretionary trading.
I can answer all those questions for you tomorrow in the room. I'm more than happy to go over that sort of stuff.
Point taken.
Keismer is asking about the DAX. Yeah, we actually looked at the DAX yesterday. I forgot to look at it today. So any chart that my data feed provides, I would be happy to take a look at.
Bruce, you're asking about goodies that are coming out. We're actually going to upgrade the support and resistance suite from support and resistance lines to Illuminati lines. I'm just kidding.
He's kidding.
I've always wanted to do that. Have a website with just fake indicators just to see if anyone would buy them. I mean, Illuminati lines. It's got to be better than Fibonacci, right?
Wicked sense of humor.
Anyway, sorry. It's getting late and I'm getting giddy.
Oh,
that's
question here from
good question, David.
Yeah,
can you hit that?
What time do the calculated lines come out? Yeah. the lines are actually calculated at midnight, so they're available for the European session. So if you happen to be trading the European session or a night owl or trading the Forex, then they generate at midnight because we're basing it, it gathers a lot of the information from the last 24 hours as well as mining data from further back in the history of the chart, but the last 24 hours are instrumental. As soon as that 24-hour session closes, then it will generate the lines for the next day.
All right. I think that's it. Eric, again, thank you so much for pushing your vocal cords for us. If you need anything, you have my email address. Feel free to reach out to me. If you go to our website, you'll see our telephone number in the lower right-hand corner. You're welcome to call us. As I said, we're very transparent, and we're more than happy to talk about trading and however we can help.
It's always fun to be here. Thank you, everybody, for your attendance and your questions. I hope that you're able to take something away from the presentation, something useful, and we might see you in the trading room tomorrow.
And Morgan, hey, listen, I didn't do a shout out to you. Thanks to the folks over at TradingPub. I've known Morgan almost since the first day he launched TradingPub. I love what they do. I think they've been a true asset to the trading community, and it's a pleasure to be associated with them. So thanks, Morgan, and team, now that you're a bigger team.
All right, good evening, everyone. And yeah, Adam and Eric, great presentation. And let me just go ahead and we're going to attempt to see how these slides work. I want to make sure that you guys are able to see them. By the way, how's everyone doing this evening while we're loading this information up?